Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, August 4th, 2013. I've got some interesting vertical lines drawn on this S&P chart, and I'm going to get to those in a moment. First, I want to just take a look at the technical picture here in terms of the channel pattern and the candlesticks here in the S&P. If you recall from last week's video, I made a lot of comments and basically laid out a case as to why the market actually had more room to go, right? If you remember that, I said we're not at the top and we should go higher. And we did go higher in the coming week. This is the weekly S&P. Last week was just a little bit of a pause, and if you didn't see that video, I highly recommend you go back and review it, and you'll see that there were a number of profile references and other that were pointing to that the market still wanted higher. So it got higher this week, and obviously things are getting, the higher it goes, the more overextended we are. I'm generally not overly concerned that the market is just up without a pause. I'm more concerned that the market is up in a very steep trend without a pause. You can clearly see that this is your dominant channel. This here would be a secondary, which is obviously not as steep. You could look at the slope of this line, so to speak. You could look at the slope of this line. It's much, much steeper. So this is why the market is probably setting itself up for some sort of a corrective move in the near future. The reason I put these vertical lines, here, is if I switch back to a daily, and before I get into that, I do want to also point out that the trend here, which is the very steep one, is corresponding with the upper part of the channel. If you recall, this is the May 22nd high. When we broke out of the channel and went actually to the upside, we actually rose outside of the channel by a good number of points. I mean, this was like 64, 65 area where we broke, and this up here is like the 87, 88 high or so. That high is exactly 87.18. So there was a huge run past the channel. And then we corrected, and when we corrected, we didn't correct to the bottom of the channel at all, and we just have had this really strong advance. It's been kind of straight up. And what I was saying was that if you strike a trend line from the lows of this channel straight up here, you can use the top of the channel and it creates a wedge. And this sort of a wedge that rises like this up into a very pointy corner like that usually resolves in a snap lower. Usually what will happen, it's almost like a cliff kind of. Stocks are kind of going up a very steep face, and then the only way to go is down from there. So I do think there's chance of corrective action coming, but we will have to see signals different from the signals that we saw last week in the profile, and I'll get to that in a second. If you recall, once again, I'll reference last week's video that the profile did not show topping action yet, right? I was talking about the fact that the overnight high last week was made in an overnight session. It needed to be made in an RTH session. That has since been corrected, but it wasn't then. There was no excess on the high. There's still no excess on the profile. So we probably go a little bit higher this week, and we'll be looking for some excess signals to tell us when there might be a good opportunity to put on a high probability short. Okay, so the vertical lines. What they are is they are the dates of March 14th and April 12th and May 20th. And the reason that I put them on here is because they are the exact dates that you had the bottoming action in the VIX. So I thought that would be interesting to know. This is, and I'll put this here so it corresponds, time level, right? So this is the March 14th low. And this one is the April 12th low. And this one is the May 17th low. And you can see that every time that we had at these lows, the VIX had a sharp rise upwards. That was there. This one, very sharp rise upwards. And here, very sharp rise upwards. And I wanted to see if I felt that it would be a good idea to revisit this at this juncture, because we've got a VIX down at 1198, breaking down below this support level here, and now the only way to go is probably to this prior low here at 11. So I thought it would be a good idea in this video to see how that corresponds with the S&P, and did we actually back off after those VIX lows were made? And the truth is we did. Here's the March 14th, and then you had down. Not much of a correction, but still. I mean, you came in 3 days, you closed up at the high on that day. The next day you basically double topped, and you came in. Here's the next one. Pretty steep sell-off actually from there. From there, that was a high of just under 1,600. to a low of 1535. So you had about 65 points there of S&P drop. And this one is the May 17th VIX low, and the top was put in the market a couple of trading days later on May 22nd. And the correction there was from 1686 down to 1561. So about 120 S&P points there. That's quite a large move over that period. So when we come into these VIX lows, it does actually make sense, if you look at it historically, to possibly put on a short at those levels. Okay, another thing that I wanted to also point out that could be tying in with the VIX coming into a low for a possible retracement would be, look at the NDX. This is the NASDAQ 100, which has been really strong as of late. And I want to point out that the channel here is really almost too perfect. I mean, look, here's how it's defined between these 2 points. And this confirms that it is the right point, I think, because you did have trendline support right to it. And just a little bit of dangling stuff underneath, and it moved up. And notice that if you extrapolate that out, you move it over to here, kind of double it, and you move it right to this high. The high in the NDX would have to be right at 3177 just perfectly. So that actually bodes well, I think, to set an alert on right at that area, at or above 31. I'll leave it at 3166. That's good, so I'll be ahead of it. So keep an eye on the NDX also coming into that level. But I do think there's a little bit more upside to go this coming week. Let's take a quick look at market profile here. Okay, so the first takeaway I have here, looking at these, this is Thursday and Friday, the first 2 days of August. August was obviously, the first day was obviously kind of this huge, just barn burner of a gap. It was 14 S&P handles to the upside on the ES, and there was really no filling of it, at least not to like a prior close or anything. Here's where the market settled the last 2 days of July, which I thought was interesting, that we had identical closes here on the last 2 days of July. And then you just had this from here to the green dot is the gap. You had this huge gap, went right to Friday's high to the penny. Momentum players are still in control. I've gone through this many times, talking about the difference between how the momentum players and day time frame people will act as opposed to the longer time frame. After we gapped, we had almost a perfect balancing day. I found that interesting. I kind of find that a sign of weakness, because it tells me that the whole majority of the move was in the gap, and then once the market gapped, it didn't really power that much higher. It just kind of it did power higher. I shouldn't say that. I mean, this was more or less a trending day. I mean, you had an open relatively low, you consolidated in the middle of the day, then you broke higher towards the end of the day, and then you only backed off a little bit at the end of the day. But what I mean to say is that there was really no expansion of the profile. There was no, notice how the value area is relatively squat and small on that day, and the shape of the distribution is more of a balancing day. And then Friday was just another balancing day within Thursday's day, even though you did make yet another new high. There was no extension of the profile either. You didn't have the nice, more elongated out profile that would indicate that more new money buyers were coming in. We still continue to have lack of excess on the high. If you recall, that's what my discussion was about in last week's video, mostly focusing on the fact that you didn't have this type of pattern like way up here, like above price action. That's really what you need, is you need to see this sort of excess flush out, way up here, making this big spike up away from other price action. That's called an excess high. And we certainly didn't get that on Thursday or Friday. You had a little bit of excess here on Thursday's high, but notice that prices didn't really auction high enough at all to bring in any serious sellers. On Friday, you can see that we actually went higher than that high. And notice what happened in the last two trading periods here on Friday in that NO period there. I'll just bring this out a little bit. Notice that they started building out right next to each other, so there wasn't even any excess on the high at all. There's actually a 2 TPO wide structure at the top on Friday. So we continue to have lack of excess. Putting that together with what I just showed you on the S&P and that NDX chart that still has a ways to go up into its channel, I think that the market still wants to have a little bit more upside. I'm going to be looking for a short in the market this coming week or whenever it happens. As I was saying, when we get a VIX low that's going to tie in with those prior VIX lows, and we're getting very, very close, because if we look at a horizontal, if we put a horizontal mark right here, We've already crossed that low, and now we just have this low. So it's really just in this area. So anywhere in this area, and I'd like to see that tie in, as I was saying, with a large capitulation type spike on the profile in the ES futures. So that's what I'm going to be watching for soon to initiate a short. And even better, if it all ties in with, if the NDX is hitting its channel resistance at the exact same time, that would be great. It probably might be an even better short on the NQ or on tech stocks, for lack of a better word, because you have this channel resistance in the NDX. All right. And last but not least, I'd like to revisit my comments from last week on the long-term corn chart, and also point you to the Ask the Shadow column in this particular weekend update that you're watching the video right now. Just hit the Ask the Shadow button on the table of contents to the left, or also just scroll down, and there's a really interesting letter that was sent to me by a gentleman who has some really good fundamental knowledge of this space, and you'll see that he agrees with my trade, and he also wants to buy December corn futures here at the same level that I was talking about. I'm looking at a very basic trend line touch here. It's been a long time coming, plus corn did make a higher high here before it started its low. Remember, I like to buy trend lines that come after a higher high was made, because it does make me believe that there's traders out there who will be buying the trend line thinking that obviously that the trend is still up, and that, you know, here's their chance to get back in on a rising trend. So I'm looking at corn as a buy in the 430 to 420 area. For a longer term hold. Again, these are December contracts, and again, I invite you to please read the Ask the Shadow column in the weekend update just below where you're watching the video right now. All right, that's all the time I have for today. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.